ever get buried under financial reports. We're cutting through that today. We're diving into Medtronic's latest Q1 results for fiscal 26, just out August 19th. We'll break down what happened, what's next, and why it matters for health tech, using their official release, the earnings call, all of it. Ready?
Let's do it. And right off the bat, Medtronic's consistency is pretty striking. This is their 11th straight quarter of mid-single-digit organic revenue growth.
11 quarters. Wow.
Yeah.
That's stability in a really dynamic field.
It really is. It points to, solid execution.
Okay, so let's hit the Q1 numbers. What are the big headlines?
All right, so total worldwide revenue was $8.6 billion. That's the reported number. It came in at $8.5 billion adjusted. That's an 8.4% reported increase.
8.4% reported, but you mentioned organic growth earlier.
Yeah, and that's the one to really watch. It was 4.8% organic growth.
Remind us quickly why focus on organic versus reported.
Sure. Organic basically strips out things like foreign currency swings and some other revenue items. So it gives you a cleaner look at how the core business is actually doing.
Got it. Better signal through the noise. What about earnings per share, the EPS?
Non-GAAP diluted EPS came in at $1.26. That's up 2%. The GAAP diluted EPS was ELAL at 81 cents, which was up 1%.
Okay. And I saw the CEO, Jeff Martha. He sounded pretty positive.
He did. He mentioned another consistent quarter with broad strength from several innovative product categories.
Yeah, but he also talked about accelerating growth later in the year. That caught my ear. He said, "We're confident and well-positioned to accelerate as we make meaningful progress on our major growth drivers." Sounds like they see bigger things coming.
Absolutely. That confidence seems rooted in what's performing well right now and what's in the pipeline. And speaking of performing well, Q1 had a real standout. Cardiac Ablation Solutions, or CAS.
Oh yeah, that growth was huge, wasn't it? Nearly 50% globally.
Almost 50% revenue growth, yes. And in the U.S., it was, wait for it, 72% growth.
72%. What's fueling that? Is it that pulse field ablation tech?
Exactly. PFA is the big driver there. Products like PulseSelect and Sphere-9. PFA is, it's a different way to treat arrhythmias, using electrical fields instead of heat or cold. Potentially safer, maybe faster. It's getting adopted really quickly.
A game changer. But it wasn't just CAS, right? They mentioned broad strength.
Correct. Good growth also seen in transcatheter valves. That's part of their structural heart and aortic unit. And neuromodulation was strong too, up 8.6% organic. That was driven by things like Inceptive for pain stimulation and BrainSense for adaptive deep brain stimulation.
And diabetes. That's always an interesting one. How did that do?
Diabetes posted $721 million in revenue. That's up 7.9% organically. Pretty solid.
Impressive. And cardiac rhythm and heart failure. I remember seeing some big numbers there too.
Yeah, high single-digit organic growth overall. Within that, micro-leadless pacemakers were up 14%, and the Aurora EV ICD, that's their extravascular defibrillator, saw 83% growth. Huge jump.
83%. These aren't small innovations gaining traction.
Definitely not. But, strong revenue is one thing. We also need to look underneath at profitability and how they're managing costs.
Right, the margins. How did those look?
Okay, so adjusted gross margin was 65.1%. That was basically in line with what analysts expected. It was down slightly, about 80 basis points compared to last year, though.
Down a bit. Any reason why?
Medtronic pointed to a couple of things. They're getting benefits from pricing and cost-saving programs, COGS efficiency. But there were some headwinds, like business mix more lower-margin capital equipment in CAS as it ramps up so fast. And also the early manufacturing costs for the new Simplera sensor in diabetes. These things can pressure margins in the short term.
Okay, so trade-offs. Investing in growth sometimes hits margins initially.
Yeah.
How are they balancing that with future investment?
That's the key question, right? And they are investing. R&D spending was up 7.7%. That's actually growing faster than revenue by about 100 basis points, or 1%. They specifically mentioned putting more capital into cardiovascular and diabetes projects the high-growth areas.
Investing heavily there. But what about general expenses, like SG&A?
They showed good discipline there. SG&A grew slower than revenue, about 170 basis points slower. So they're finding efficiencies even while, investing in launching new products like building out the CAS mapper infrastructure and developing the market for renal denervation.
So managing costs well while still funding the future.
Yeah.
What was the bottom line on operating profit?
Adjusted operating profit hit $2 billion. That translates to an adjusted operating margin of 23.6%. So yeah, managing the balance pretty effectively, it seems, which really sets the stage for their outlook.
Perfect transition. Let's talk about that forward outlook. Strong Q1 is great, but what does it mean for the rest of FY26?
Well, first off, they stuck with their full-year organic revenue growth target, still guiding to approximately 5%.
Okay, consistency there. But didn't they change the EPS guidance?
They did. That was the interesting part. They raised the non-GAAP EPS guidance for the full year. The new range is $5.60 to $5.66 per share. That's up from $5.60 to $5.60 previously.
Raised guidance. Why the increase? Just the Q1 beat or something else?
It was partly the Q1 performance, yes, but also a better outlook on tariffs. They now expect the tariff impact to be around $185 million for the year. That's down quite a bit from their earlier estimate, which was $200 million to $350 million.
So better navigating those external cost pressures too.
Exactly. The CFO, Thierry Piéton, basically said their confidence is growing because the growth drivers are advancing and they're executing on efficiencies, driving earnings growth.
Makes sense. So let's dig into those growth drivers they expect to accelerate things in the second half. CAS, for example.
Yeah, cardiac ablation. They actually expect growth in Q2 to be even faster than the nearly 50% they just reported for Q1.
Faster than 50%. Wow.
Yeah. They see a path to adding another $1 billion in revenue there, incremental, off the FY25 base. Plus, the pivotal trial for that Affera Sphere-360 catheter, that's expected to kick off this calendar year. Big pipeline news.
Huge potential there. What about renal denervation, RDN? That's been talked about for a while.
Big developments there, too. With their Simplicity spiral system for hypertension. The really critical thing is CMS, that's Medicare and Medicaid services in the U.S., they put out a proposed national coverage decision last month.
Proposed coverage, meaning Medicare might start paying for it routinely.
That's the idea. The final decision is expected by October 8th, 2025. And you also have major medical groups like the ACC and AHA updating guidelines to recognize RDN as a treatment option. So the path for market access is clearing up. That's key for the U.S. launch.
Okay, RDN finally seems poised to take off. Any other upcoming launches?
Yep. Peripheral vascular has the Contigo carotid stent system launching this quarter, and the Liberant mechanical thrombectomy system is expected in the second half of the fiscal year.
Busy pipeline. How about neuroscience?
Acceleration expected there, too. Pelvic health is a focus, with a new tibial bladder control stimulator launch coming this fall, assuming FDA approval. They actually rejigged their commercial team in Q1 specifically to prepare for that launch.
Planning ahead.
Exactly. And neurovascular growth should pick up each quarter as they get past some tough comparisons from China VBP and a product recall last year. New products are helping there too. And in spine, they keep highlighting the ABLE ecosystem seems to be really helping them gain share.
That ABLE integrated system, right? Makes sense. And medical surgical, the Hugo robot.
Yes, the Hugo RAS system. The U.S. launch is pegged for the second half of this fiscal year. They expect it to be accretive to growth, meaning it should boost the overall growth rate. Plus, they just got European approval, CE mark, for their ligature vessel sealing tech to be used with Hugo. And ligature is a really popular technology globally.
So Hugo plus ligature could be a powerful combo in the robotic surgery market.
Could be. And that brings us to diabetes. Lots happening there, too.
Right, 2 new sensors launching.
Yeah, expecting better performance partly because of those. Simplera Syncs is coming this fall. And then the sensor they're doing based on Abbott's platform called Instinct, that's due in the coming months.
And Simplera is supposed to be, what, smaller and easier to use?
Half the size, disposable, no overtape needed, big usability improvements. And Instinct gives access to Abbott's well-regarded CGM tech. Combined with Medtronic's own Mini-Med 780G pump and its meal detection feature, you see the potential for improvement.
Definitely sounds like a stronger offering.
They also mentioned the next-gen pump, Mini-Med Flex, is on track for FDA submission by the end of the fiscal year. And the Mini-Med Go system, using the InPen tech, is launching in the U.S.
Lots of moving parts in diabetes. And then there's the big strategic move, the separation.
Right. The plan to spin off diabetes into a new public company called MiniMed, still on track to happen within 15 months.
And the benefit for the remaining Medtronic.
Expected to boost earnings per share right away. They estimate about 50 basis points of improvement to gross margin and 100 basis points, a full percentage point, to operating margin for the RemainCo Medtronic.
So better profitability and sharper focus for both companies.
That's a strategic rationale, yeah. Sharpening focus.
Okay, let's zoom out a bit then. Beyond the products and the spinoff, there was news about a partnership with Elliott Management. What's that about?
Yeah, this seems aimed at unlocking more value. It's a collaboration designed to, as they put it, unlock the full extent of Medtronic's potential. Practically, it means two new independent directors are joining the board, John Grodelars and Bill Jellison. Both have deep medtech operational backgrounds.
Fresh eyes. New directors. Anything else?
Yes, and this is quite interesting. They're forming two new board committees. One is a growth committee focused on portfolio decisions, capital allocation, basically, how to grow faster. The other is an operating committee focused on driving efficiency gains in manufacturing, supply chain, the whole expense base.
So dedicated board-level focus on both growth and efficiency.
Exactly. It sounds like creating a structure to make sure innovation leads to growth, and that growth then provides the resources, the oxygen, as the CEO called it, to fund more smart innovation, a virtuous cycle.
Innovation fuels growth, and growth fuels innovation. I like that framing. It speaks to a long-term vision.
It does. And they're backing it up with commitment to keep investing in R&D and sales and marketing to make the earnings growth durable. They also flagged an investor day coming up mid-calendar year 2026. That's where they'll lay out the full strategy after the diabetes separation, the value of the remaining portfolio, and new long-term financial goals.
So looking ahead quite significantly, it feels like more than just reporting a good quarter.
I agree. It feels like they're signaling a shift. Building on the consistency, but really pushing for acceleration now, aligning the portfolio, driving efficiency, turning that top-line growth into stronger, sustained earnings growth.
Yeah, a real inflection point seems to be the message. Strong performance now, but with a very clear, deliberate plan to accelerate.
Leveraging their current strengths while making these big strategic bets.
Okay, so wrapping up our deep dive, Medtronic's clearly at this fascinating point. Strong Q1, yes, but also this roadmap for faster growth, driven by innovation, PFA, RDN, robotics, new sensors, and these big strategic moves like the diabetes separation and the Elliott partnership.
A lot is converging for them right now.
It makes you think, doesn't it? Considering their mission, alleviate pain, restore health, and extend life, and all this focus on AI, robotics, advanced devices, how might these innovations really change patient care over the next, say, 5 or 10 years? What could the real-world impact be for all of us from this push for, as they call, extraordinary engineering? Something to chew on.